Hey everyone. Okay, let's continue with the budgeting process. Um, we are going to skip past some of this information. We talked about the different budgets. Um, sound reasoning for budget. Feel free to read up on this. Rules for sound budgeting. It's on page 288 as well. The business plan. I'm pretty sure you've covered business plans and marketing plans. Just again, going into all of the specific details around what an organization wants to do and how they plan on accomplishing it. And then the factor that comes into play at the end of every business plan or feasibility study, which we've talked about in our class, is what do the numbers show? Because it's wonderful to have a great business plan, but if in the end the numbers aren't showing that it's viable or feasible, then there's no point in actually attempting without making some major changes to the business plan to ensure that it will be profitable in the end. And again, it doesn't have to be profitable or most likely won't be profitable in the first couple of years. A lot of times it takes time for a business to get off the ground and start making money. Okay, so let's look at a projected statement of income or income statement. So we've we've done this before as well. So again, this chapter is basically pulling together everything that we've been talking about for the beginning of the term. Um, so modern industries, for example, in 2013 had revenue of 2.5 million, and then in 2014 they had revenue of 2,875,000, and that is a 15% increase. So what you do to figure that out is you've got your 2,875 minus your 2.5, okay, and that gives you 375 in the difference. And then you take the 375, and divide that by what it was in the previous year, which was your 2.5 million, and then that gives you your 15% increase. Okay, so that is showing how um, the increase is from one year to the next. And that is actually called a horizontal analysis. Okay, one year compared to another year and what the increase or decrease was. And if you remember, the vertical analysis is when we compare everything to the sales number. So for example, in 2013, they are showing a 3.2% profit. Okay, so that is your 80, your, whoops, your 80,000 profit divided by, I keep clicking the off button on my pen, on the 2.5 million, and that is showing a 3.2% profit margin for the year. And in 2014, it is showing a 4.6% profit for the year. Okay. Um, let's move on to the next slide. Okay, and we're not going to get a lot into our balance sheet. The main thing is focusing on our income statement. Okay, so at this point, I am going to go over the increases and decreases in the textbook. It's on page 291, Statement of Income for Eastman Technologies. We'll go over that, and then I'm going to assign homework problem. You can probably hear me flipping through the textbook. I just want to get to the actual exercise. Okay, we are going to do exercise 2, and it's based on Nick Streezy's owned and operated pizza delivery and takeout restaurant. So if you want to give that one a try now or watch the next video, and then I'll assign this question, and then I'm actually going to go over the solution for exercise 2 as well, and then assign one that's very similar as your homework question.